Now, the second, major initiative we did was, in fact, to complement the sinking fund, or even ahead of the sinking fund, we also went to the World Bank, took a guarantee from the World Bank to support, because we're having difficulty, with, accessing the markets.
Yeah, the difficulties we are facing right now, again, was that, except that now is more acute. Yours difficulty. As we speak right now, we are currently shut off from the market. Yeah, but
yes, we were not shut off. But we were, remember the 10.2 we did was criticized at the time. But we were facing, the global financial crisis and other issues. I think we lacked the time to look at all the background. But with that 1 billion, the entire 1 billion went into refinancing of domestic debt. And remember I spoke about 550, the remaining 200 was used to exchange. That is the restructuring element.
So when you say refinancing, were you buying back the bonds? The
550 we bought back, yes. Ghana bought back and cancelled. We had, managers on the London and other Ghana and London stock exchange, and they bought back, 336 million. The 200 million we paid, those who were holding the bonds. That's what the current government did.
Why did you choose? Why did you choose that option? Was it because you were afraid of this impact if you had attempted what is being proposed on the domestic economy?
No. One, our constitution says we may set up a sinking fund. I believe the drafters of the constitution know that we have had problems with rolling over. The problem with the TBL is that it's 90 days. It's supposed to be liquidity only to help government, especially at the beginning of the year when revenues are now coming in. Then we keep rolling them out and they became long-term. So we needed funds to take them off, right? So we combined the guarantee and the sinking fund. It's in the constitution. It's the same with the contingency fund. It's in the constitution. So we as societies, capped the stabilization fund, and this was the purpose for which we used, that money. So it's practical debt management. And if you look at the Public Financial Management Act, a debt management office as a result of this was supposed to be set up, similar to the Comptroller and Accountant General, to focus on the nation's debt. Did we have, and the point I want to make is that we did all these initiatives, mind you, 2013, 2014, and tabled them during the negotiations for the ECF.
Okay, so you went to the negotiations already with these to the IMF. And what did the IMF say to you when you presented them?
Well, the IMF looked at it critically. The World Bank was there. And mind you, World Bank Treasury was also helping us to do some of these restructuring and other things which I was talking about. The UK Treasury and others, but the World Bank and others were there. And we explained that we have debt. We can't put everything in consumption. Deficit is you spent and you are going to borrow. And it's going to result in more debt, right? They were sympathetic. They would have wished that probably we focus more on the deficit and reduce it. But we explained and we said this was, policy. In fact, there was a point where when the crude oil prices fell, there was a suggestion that we should use the sinking fund to lower the deficit. We said we couldn't do it because you had to go to Parliament. It's part of the law, which we had said that we wanted to do. And remember, again, we were facing serious, remember crude oil prices were $99.
Yeah.
They fell to about $35. But we saw the first sovereign bond in particular waiting for us in 2017. We have reduced, of course, we were comfortable at that time because we said we would do 5.9% deficit and we ended up